You don't have radon problems in Florida, do you?
I'm sitting here thinking to myself, how could I even have carbon monoxide in my house? I don't know enough, but
It's Florida. Don't you open your windows? What's happening, everybody? It's your boys, Chicago Sean, Steve Straza, coming to you live. Day 2 of crazy Fed-induced market action for reasons we can't understand. If you guys saw Straza and I talking yesterday, we were riffing on it. Straza, how you doing, buddy?
good man. You must be talking about Jerome Powell.
The Jerome Powell, for those in the know. Yes.
I tried to listen again today. It's just all political grandstanding. It's so terrible. It's entertaining. There's definitely like entertaining moments, but
yeah, if you're there for the laughs, to watch these politicians grandstand, then yeah, it could be fun.
Yeah, it's
all right. So this is the options trade of the week. Usually our man JC is on the call with me, but JC's got other things going on. Mr. Busy. That's okay, because hey, the trade we're putting on today is a trade that we talked about in our analyst meeting this morning. We had an analyst meeting, just not the normal way we usually do, but that's neither here nor there for you guys. But anyway, the thought that we all had was we should be looking to be selling premium here, right? I mean, the markets are getting a little choppy, a little volatile, and for sure that was my answer. For sure, looking to sell some premium. And the name that was at the top of my list, as far as at the time that had the highest implied volatility relative to its peers, was the materials ETF, ticker XLB. And as soon as I mentioned that, Straza's like, yes, I like it. Straza, why don't you walk us through some of the charts you're looking at that tell us why you like selling premium here in XLB?
Materials have looked really good, especially certain subsectors, which we'll talk about. They ran up, made new short-term highs last week. Saw a lot of new short-term highs in the space. Plenty of 52-week highs and all-time highs too in the strongest names. But now it's, you're just seeing a total retracement of last week's strength just early this week. So here's the materials sector spider, XLB, really all of the, classic characteristics of a trendless market, right? Incremental new high earlier this year, couldn't get there just last week, right? Maybe on a closing basis. I think we got there on a weekly closing basis, right? So not really getting higher highs in any sort of material way. You have a sideways sloping 200-day. It's trying to flatten out and curl up, but it's going to take some time still. Momentum, really nothing special, right? You want to see buyers be really aggressive, and price make new highs, not getting that at all. In fact, you actually have a bearish momentum divergence in place here. And let's look at some of the strongest groups. We got excited last week. Coal stocks were making new highs. Steel stocks were making new highs. But look, they didn't hold, right? So after the past few days of trading, coal pulling back. What does this chart tell me? Failed breakout for now. It needs more time, right? It needs more time to absorb the overhead supply at this level. Steel stocks closed at their highest level since like 2011 last week. This week coming back in. So it looks like it's a failed breakout for now. So if even the strongest areas need more time, there's going to be more like backing and filling there. I think a sideways bet or a sideways strategy for the materials sector spider makes a lot of sense.
Right. I couldn't agree more. And one nice thing is that, while the volatility of the premium in these options isn't insanely high, we chose XLB because relative to its peers, it had the highest volatility. So we're taking what we can get. But the nice thing is that there's plenty of premium at the 87 and 77 call and put strikes, respectively, kind of highlighted there on your chart. And I like selling premium at those levels because, I mean, obviously that 77 level is a very obvious level of support. If we break 77 on the low side, that's significant. That's telling us that there's a change of character. Meanwhile, 87 on the high side, that level's kind of just floating up there in space, but it feels comfortably far away enough for me right now that I'm very comfortable selling that strike. And we were able to sell those options in April. So the 77 puts and the 87 calls together, we collected a $1.25 credit to put that trade on. And look, if XLB stays in that sideways range, even just for the next 3 weeks, let's say, we should have no trouble pulling a profit out of this trade. We're not going to just hold this trade all the way to expiration. That's never our plan when we're holding naked short options. We're going to buy this spread back when we could buy it for half of what we collected. So we sold it for 125 today. I got a resting order to buy it back right now. It's 60 cents. Good till cancel. So as soon as I can buy it back for 60 cents, I will do so. And if XLB stays in this range, at least for another, let's say 3 weeks, we should have no trouble hitting that profit target.
Yeah, I like that a lot. So they expire what, late April, right? April 21st, these options?
April 21st is expiration day. Yep. And look, as I said before, I'm leaving that resting order to buy it back at my profit target, but I'm not just going to forget about this trade. I'm still going to monitor price action. If we trade below 77 or above 87, that tells me that we're wrong, that the range that the sector is breaking out of its range. It's got designs on a different, it's doing something different than what we thought. I'm going to want out. I'm going to close this spread down, probably for a loss at that point. Potentially could be a profit depending on the timing of when that break happens. But I'll assume it's going to be a loss, and it'll be manageable as long as we act quickly.
I like it a lot because materials are still some of the strongest stocks in the market right now. So when I look at the lower bounds around 77, you're really surprising to see them take out those pivot lows, considering just the strength there, right? That would be happening in an environment where the S&P, things are getting pretty ugly, and the S&P is retracing a lot far further than we're anticipating. Then on the upside, right, when you look at the upper bounds, gives them room to make a new incremental high, and this trade still works. So a lot of room here. I really like it a lot. I think, sideways is 100% the trend here over short-term and a long-term basis. So it's a good setup for sure.
Yeah, and a little sidebar here, just kind of a little bit of in-depth thinking of how I think when markets get like the way they are right now. When we start seeing sell-offs in stocks and we start seeing volatility starting to tick a little bit higher, my first inclination often is to start looking for trades like this, where I could sell premium, not making a directional bet, just kind of betting on sideways sloppy action while prices consolidate or do what they need to do. This is the type of environment where I'd like to put these types of trades on, and as long as the S&P 500 and the broader markets kind of chop around sideways and maybe even go a little bit lower from here, which is totally possible, I'm going to keep looking for trades like this over the next week or so. So this is not just a one-off. I think I'm going to be doing more trades like this over the next few days. So stay tuned for that. But that's our trade, guys. We're short the April Strangle and XLB, short the 77 puts and the 87 calls. We collected $1.25 for them. I'm not sure where it's trading right now. Might be a little bit higher in that. So Straza, if you haven't put the trade on yet, you might be able to sell it for a little bit more premium than I sold it for. Good for you.
Yeah.
It's the strikes that we like the most. We're not so concerned about the actual credit. Like if I could sell for 130, if I could sell for 120, I'm not nickel and dime my entry. I'm more concerned about getting the right strikes. And for me, the 77 and the 87 strikes feel right.
I like it, Sean.
All right, buddy. Thanks for tuning in, everybody. This has been the Options Trade of the Week. He's Steve Straza. I'm Sean McLaughlin. We'll talk to you next week. Take care, everybody.
Later.